Hello, this is Edmund Shing from BCS Asset Management with a look at global strategy for this week. If we look to this week, what are we going to look at? We're going to look at current uptrends. We are also going to look at sectors, technology and healthcare. We're going to look at changes of trend. And finally, we're going to look at risk. Starting with current uptrends. Here on page 4, we can see both the black line, the Japanese Topics Index, and also the yellow line, the Shenzhen Chinese A-Share Index, both hitting new highs. So these are strong uptrends, which I like at the moment. Secondly, in terms of sectors, the two strongest sectors in the US at the moment are in black technology, and in yellow, the healthcare indices. Both sectors have broken new highs, and both sectors are very big holdings in my global mega themes fund. The third continued uptrend is actually in the yellow line, which is the US dollar index, which continues to break new highs. I've turned it upside down in this chart, so it's pointing down. So in other words, when the yellow line goes down, that is the US dollar getting stronger. And you can see there is a strong correlation with the weaker oil price in black. Now looking at changes of trend, secondly. Here we have the grains index, which is a part of the Goldman Sachs commodity index. So the grains part is actually rallying and has rallied since the beginning of October, after what has been a very sharp fall from early May until the end of September. So maybe more bullish outlook for grains. However, we see the opposite here in the high yield corporate bond index in the US. Having rallied from the middle of October, we now see high yield bond prices falling. So again, it's time to be more cautious yet again on high yield corporate bonds. Now looking at risk. Here on page 11, we can see the blue line, which is the level of the VIX volatility index, which has fallen substantially and is now at 13.3. So in general, volatility is still falling, which tends to be good for stock markets. The spread between short-term VIX and mid-term VXV volatility is also relatively healthy, here on this chart in blue. And if we focus here on page 13 on the line in green, we can see that the Bank of America Merrill Lynch Financial Stress Index has fallen quite substantially since its high back in September. And this is supported by a rebound in US financial conditions as shown on this line in blue on page 14. So financial conditions are improving both in the US and also looking at the green line, slowly they are improving in the Eurozone as well. So this is positive for risk assets. So in general, we like the continued uptrends in Chinese A-shares, in the Japanese Topics Index, and in sectors we are bullish on the technology and healthcare indices. In terms of change of trends, you should be more cautious about high yield bonds. And finally, in terms of risk, we see a reduction in risk indicators, which should be positive for the stock markets. This is Edmund Shing saying thank you for watching and hope to see you again soon.